Hey guys, this is Erica Roberts, and I am a loan officer with LA Lending. And I want to talk to you guys today about something nobody wants to talk about. Let's talk about rates. Okay, so interest rates and how they affect your loan and how they're calculated. Okay, so have you ever called a lender and you told them what your credit was, how much your debts were, what your purchase price was, and then they say, okay, awesome, your interest rate is 4%. Okay, well, what all went into that and why is it the amount that it is? I had a guy call me 2 days ago. He's buying a second home, like like a camp or a condo or something at the beach, that kind of thing. And I said, well, it looks like your rate is going to be 4.375. Okay. But it's going to pay, $750 towards your closing cost. And he said, what do you mean? What do you mean it's going to pay? I said, well, there are credits associated with that interest rate. It's a discount point essentially, but when the rate's not at par, you get a little money back towards closing. And he said, I've never heard of this before. What is that? And if I'm talking too fast, don't freak out. I'm going to slow it down. But he'd never heard of this before. He had been shopping. He had gotten 5 different quotes, and he stopped at me and said, you're the first person who's ever explained this. So I figured it was a good time to go ahead and take a look at this. Okay. I don't know if y'all are going to be able to see this, but okay. So let's say you've heard the rate is at 4.875. Okay. 4.875%. There's almost never a par rate, meaning the interest rates change daily and up to 3 times per day. So even though I tell you it's 4.875, either you're going to have to pay a little bit to get that, or the rate is going to pay you a little bit towards closing cost, depending on where we're at. So for this particular rate, 4.875 pays you $440 towards closing cost. Okay, the other option is to go down to 4.75%, but that one you have to pay $448 to get to this amount, that interest rate. So you just have to decide whether it's worth getting a little money towards closing costs. And look, sometimes it's almost exactly par. So this rate may carry, it may pay you $3 towards closing costs. Well, then it is par, and then whatever that other lender told you is exactly right. But usually it's either going to pay you a little bit or you can buy down to the next rate. Now, with that in mind, you can get any interest rate you want if you'll pay enough for it. So we can go all the way down to 4%, but it's going to cost you $8,000 on this particular scenario. It just depends. It's all, based on a point system and the amount of your loan. So anytime somebody tells you, well, I can get you this low rate, that may be true, but how much are you going to have to pay for it? So just something to think about. That's kind of the basics of interest rates. A lot goes into it. Debt to income goes into it. Loan amount. If you have a really low loan amount, that lends itself to a higher interest rate. If you have a really high loan amount, it lends itself to a little bit of a higher interest rate. Credit score makes a big difference. How much debt you have makes a difference. How much you're willing to put down on the loan makes a big difference. So just something to think about. Thanks a bunch. Let's see. So again, this is Erica Roberts with LA Lending. And my cell is 225-405-4193. If you have any questions or you want to ask me about today's rates.